When it comes to scaling any investment portfolio, you have one of two options. Only use what you have and get left behind, or leverage other people's money to get ahead. In today's video, I will be walking you through why it is wise to always try to leverage other people's money. As for the rest of this video, I'll be referring other people's money to OPM. So the first thing that we'll look at is what are other organizations or who are other people that already leverage OPM? The first one is pretty obvious. Banks. Banks only use other people's money. They use your money. Banks are always buying US treasuries. Banks are always buying stocks, bonds, investments, assets, and it's never with the actual bank's money. It's with your money. When the banks lend people money, they're not lending their own money. They're lending your money. The banks are an absolute perfect example of a financial institution that literally makes trillions and trillions and trillions of dollars a year leveraging other people's money. Another perfect example would be real estate investors. Real estate investors, most of the time, are going to go to a private money lender or a hard money lender. They're going to go to an individual and ask that individual if they can use their money to go put into investment properties. And then they'll refinance, or they'll sell the property, or they'll do something with that property and get the money back, repay the private or hard money lender, and then keep part of what's left as their profits. But now I'm going to dive into how you can leverage other people's money without having to use a bank or without having to use a private money lender or a hard money lender. Essentially, what you're doing is you are becoming your own bank. You'd want to use a cash value life insurance policy, but specifically an IUL, and you would fund this policy. And the thing that is going to allow you to use other people's money is the fact that all the money that you put inside of this life insurance policy is going to earn a high yield of interest, tax-free, with zero market risk. And so now you have your principal earning cash value. Very similar to how you'd place money into a home, you earn equity just from the appreciation of your home. Well, very similar with the IUL. You place your principal in there, you make contributions into the IUL, and now you're earning a cash value, which is, again, just like earning equity. Well, based on the amount of cash value you have in the policy, you then will also earn a net surrender value, which is really just a line of credit that you're earning with the life insurance policy. Now we're gonna start leveraging other people's money. We're gonna start using OPM. But with this specific method, we are gonna be spending or using the life insurance carrier's money. Now, the reason why this is so cool is because life insurance carriers charge a very, very low interest rate compared to a hard money lender or a private money lender. With a hard money lender or private money lender, you're looking at anywhere between like 10 to 15% in interest. Sometimes I've heard stories of it being more. With life insurance companies, but specifically IULs, you're going to be looking at the interest or the cost to borrow this money anywhere from 3.9% to about 5%. And that's right now in 2024 when interest rates are really high. When interest rates were low, the cost to borrow money from the life insurance carrier was about 1 to 2% interest. But nevertheless, it's still much cheaper to borrow from a life insurance carrier than it is a bank, a private money lender, hard money lender, or really anywhere else. Another key thing for this is that it's a no-term loan. You never have to pay this loan back. There's not a set schedule, repayment plan, or anything like that. The reason for that is because it's inevitable that at some point in time you will pass away, right? And so it's inevitable that the life insurance carrier, because the IUL is permanent life insurance, the life insurance carrier will pay out this death benefit. And so when they pay out the death benefit, they're really paying a debt that they have owed to you since the day you signed the contract and started the life insurance policy. But when you pass away, you're probably going to pass away with outstanding loans, right? So let's just say you had $500,000 in loans that you took out throughout the life of you having this policy to put into various investments or whatever it may be. And then you had a $2 million death benefit. Well, $500,000 of that $200 million death benefit will pay back that loan. And so now your beneficiaries will not only are they going to get your cash value, which is your principal plus all the interest you earned on that principal throughout your whole life, but they're also going to get $1.5 million worth of that death benefit, because that's what's left over of the death benefit after washing all of those outstanding loans that you had from loans you took out of your IUL to go put into income producing assets, which those assets are earning you an ROI. You're earning equity, you're earning appreciation, and probably earning cash flow on all those assets and investments as well. So you're leveraging the life insurance company to spend the same dollar twice, which is extremely powerful. But here's the catch. Not everybody can even qualify to get an IUL or to even use cash value life insurance. So that's why I supplied you guys with a link in the description below this video with a form. Go ahead and quickly fill out that form. It'll take you 17 seconds and see if you can even pre-qualify to even use an IUL. And if you do pre-qualify, then you'll get the option to book a quick 15-minute discovery phone call with us, just so that you can ask us any of your questions, get a little bit more of an in-depth understanding of maybe how you can use it. You can tell me what your situation is, kind of what you're thinking and how you're thinking of maybe using the IUL, or just walk me through how you want to start implementing OPM into your personal finances, how you want to start leveraging these loans from the cash value life insurance policy. And it's just a quick 15-minute discovery phone call to see if this strategy would even make sense for you.